Hello everybody, and thank you for taking the time to listen to a quick overview of the FBT changes announced over the past year. My name is Belinda Crowley and I'm a Senior Manager in the RSM Tax Division in Brisbane. The main changes I'm going to cover off relate to travel, car parking and some of the COVID-related concessions available. The discussion today will be high level, but if you have any more detailed questions, please let either me or your RSM advisor know. I'm going to start with the car parking changes. As a quick refresher, where an employer provides car parking to an employee for at least 4 hours on a business day, the provision of that parking will be potentially a fringe benefit. Importantly, for the parking to be a fringe benefit, the location of the parking needs to be within 1 kilometre of a commercial car parking station at which parking is available to the public. The ATO's previous ruling in relation to the definition of a commercial car parking station was confined to what you would traditionally classify as a commercial car parking station, that is mainly city car parks, which have a sole purpose of supplying car parking spaces. The ATO has historically excluded car parks, such as those associated with shopping centres, airports and hospitals, from the definition on the basis the use of those car parks was confined to a certain section of the public. Under the new ruling, released as a result of the Federal Court decision in the Qantas case, the ATO no longer takes a restrictive view on what is encompassed by the provision of parking to the public. In particular, restrictions on who can park at the car park will no longer disqualify a car park as a commercial car park, nor will fee structures which discourage all-day parking. And as a result of this, airport car parks, hospital car parks, and importantly shopping centre car parks will now qualify as public car parks for the purpose of determining whether a car parking fringe benefit has been provided. As a result of this, multiple businesses who have not previously had to worry about car parking benefits may now be subject to FBT, and regional businesses in particular might be affected. The ATO's new view was originally stated to apply from 1 April 2020, meaning that the wider interpretation of a commercial car park will kick in for the 2021 year. Thankfully, however, the ATO has recently confirmed that it's not going to apply its new interpretation until the 21-22 year, meaning that there's been a deferral of 1 year. This change is still coming, however, and we would recommend that employers who think that they might be affected consider its impact early. While the ATO's view in the new ruling has broadened the scope of what can be a public car park, it's important to keep in mind that the legislation still requires the car park to be a commercial car park, that is one which is operated for a profit. And in stating that shopping centre car parks in particular qualify as a public car park, the ATO has not given any further consideration to whether those car parks are also for profit. And there's certainly an argument that they're not, given the majority of the customers who park there are parking for free. We consider it requires further consideration, in particular, given the explanatory memorandum indicates that these types of car park are not intended to be considered commercial, and the ATO in its new ruling is presuming that they are. Final guidance on this is expected to be released by the ATO within the next few days. The other major change in relation to car parking fringe benefits is the extension of the small business exemption from 1 April 2021. This change has come through as part of the COVID recovery plan and hopefully will remain in place going forward. And that exemption now provides that car parking provided by an employer who is not a listed or government entity and which is not provided at a commercial car parking station is exempt where the small business entity has turnover of less than 50 million, which is up from the previous 10 million. The change doesn't take effect, however, until the 21-22 FBT year. The second item that I'd like to run through is the new rulings in relation to travel, food and accommodation. Draft tax ruling TR 2021-D1 outlines the income tax and FBT consequences of paying for food and accommodation for an employee while travelling, and it's accompanied by the now finalised TR 21-1, which deals with what is and is not tax deductible travel expenditure. A draft practical compliance guideline has also been provided, PCG 2021-D1. Draft ruling TR 2021-D1, which relates to food and accommodation, sets out a series of factors to assist taxpayers and employers to determine whether the food and accommodation provided is provided while travelling. And the key factors are that the employee's personal circumstances, for example, whether they're choosing to live in a location away from their usual place of work, and also whether the employee is living at the location. For example, the length of time that they spend there, if there's been a change in their work location, and whether the employee is accompanied by their family. To assist employers determine whether their employees are travelling, the new PCG 2021-D1 maintains the 3-week safe harbour. That is, employees who are away for less than 3 weeks at a time are generally assumed to be travelling, and expands it slightly to allow the employee to visit the same location for up to 90 days per year, but less than 3 weeks each time. Food and accommodation provided while travelling will be deductible and therefore not subject to FBT. If, however, the employee travels because they've chosen to live far away from their usual place of work, for example in another city, the ATO doesn't accept that a sufficient connection exists between the travel and income earning activities, and therefore this type of travel isn't deductible, and it will be subject to FBT where it's paid for by the employer. So while many of the concepts between the original ruling on food and accommodation are similar, there are 2 notable differences in the examples provided in the 2 rulings. Example 9 in the former ruling dealt with an employee sent on a 6-week training course that required them to stay away from their usual place of residence for the whole 6 weeks, and concluded that that employee was travelling for work. And this situation obviously now would not fit within the requirements of the draft PCG concession, as it's greater than 21 days, and therefore this scenario now needs to be reconsidered based on the factors covered in the draft ruling. The ruling also directs taxpayers to TR 98-9 to determine the deductibility of study and training related expenses. There's also a difference in the treatment between example 11 in the withdrawn ruling and the new example 3 in TR 21-D1. In the previous example, an employee who lives in Sydney but is required to work in the Melbourne office 2 to 3 days per week and in the Sydney office 2 to 3 days per week concludes that the employee is travelling for work when they're staying in Melbourne. The new example has similar facts, but it differs in that the employee's role is based in Melbourne, but the employer allows the employee to work out of the Sydney office for up to 2 days a week, which is at the employee's discretion. And the conclusion in this example is that the employee's duties don't require her to work in Sydney, and therefore the employee is not travelling for work when they're staying in Melbourne. The treatment under the former example is now uncertain, and it needs to be considered carefully based on those factors which are in TR 21-D1. Fly-in, fly-out and drive-in, drive-out concessions within the Act, they remain in place where the relevant circumstances are met. The final thing that I'd like to cover off on are some of the short-term administrative concessions announced as a result of COVID. The first of these is the change to employer property that is taken from the employer's premises and is used at home by an employee. Items such as a computer, portable printer or other electronic device are exempt from FBT where it's used predominantly for work purposes, and the ATO has clarified that use of those items such as keyboards and mouses and the payment by an employer of internet, phone and stationery expenses will not be subject to FBT provided that they're otherwise deductible. For employers which have provided relief to employees trapped overseas by way of airfares, accommodation and food, there is no specific exemption available. However, the ATO has noted that the emergency assistance exemption may be available in such cases, and this may potentially include mandatory quarantine assistance, and therefore where this has been provided, we'd recommend that you review the circumstances of each case to try and fit it within that exemption. Cars that are garaged at an employee's home during COVID will not give rise to a fringe benefit where the car is only being driven for maintenance purposes or it's not driven at all. This allows a slight deviation from the statutory deeming of it being available for private use when the car's at an employee's home. So logbooks will be really important now, as we're keeping an updated logbook if the car's usage has changed during COVID. Finally, in relation to car parking, the ATO has clarified that where an office is closed and therefore the car park is also closed, no car parking benefit will be provided. If there is no commercial car parking station within 1 kilometre of the workplace open, which has an all-day fee greater than $9.15, this year's threshold, there will also be no fringe benefit provided. This is particularly relevant given that there were significant parking discounts available around this time last year. So thank you for taking the time to run through the major FBT changes in the past year. I hope you've found it useful. But of course, if you have any questions, please don't hesitate to reach out to me or your local advisor. Stay safe, and I hope you have a lovely day. Yours in tax, Belinda.